Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news both Fed boss Powell and the IMF are increasingly worried about financial stability. But first up today, there was a dairy pulse auction overnight for milk powders. Prices for both skim milk powder and whole milk powder dipped to 0.5% in US dollar terms, extending the easing we've noted recently. But the exchange rate fell faster. So in New Zealand dollars, both commodities were up about 1%. But the key economic influence today is the overnight speech from US Fed boss Powell. He politely bemoaned the lack of key current data, but is clearly worried about what is happening in the giant US labour market. He sees payrolls about to shrink, not only because of the immigration crackdown, but softening economic activity and business hesitation due to tariff costs and uncertainty. He also said the Fed will likely end its reductions in its balance sheet because liquidity conditions are tightening. His speech set the Fed up for defensive actions ahead of what they expect are growing economic risks. Basically, they're ready to cut rates. Financial markets noted his caution, and while they didn't retreat, they aren't as gung-ho as yesterday or last week either, despite the rate cut implication. Quote, "My antenna goes up when things like that happen," unquote. Jamie Dimon said in a call with analysts about stresses like the First Brands debacle. Quote, "I probably shouldn't say this, but when you see one cockroach, there are probably more. Everyone should be forewarned on this one," unquote. In the absence of official data while their shutdown extends, trade data is filling the gap in the US. Today, the NFIB Optimism Survey came in much lower than expected, and a fall was expected. Small business owners are increasingly frustrated with the supply chain disruptions and are seeing inflation emerging in what they are paying and having a struggle passing on these costs as sales levels turn soft. Across the Pacific, China has set an ambitious new vehicle sales target for 2025 of 32.3 million units, far and away the world's largest market. The US is second at about just 18 million vehicles. China would likely hit that target. In September, sales were the strongest of the year at over 3.2 million in the month, almost 15% higher than the same month in 2024. NEVs accounted for 1.6 million, to be almost 25% up on a year ago. This is now a globally significant sector driving both the Chinese and the global economy. Singapore was bracing for a 2% year-on-year third quarter GDP expansion, down from 4.5% that they had in the second quarter, but they actually got a 2.9% expansion in September. Services and construction did more heavy lifting than was assumed when all the focus was on the troubles of their factory sector. In Australia, the NAB Business Confidence Index rose in September from August's 3-month low, staying above the long-run average. Business conditions were unchanged as stronger sales and profits were offset by weaker employment. However, forward orders slipped into contraction, indicating softer demand ahead. Through all these global changes, the IMF is trying to make sense of how this is affecting the world's economy. They are somewhat confused by, quote, complex forces, unquote. Their World Economic Outlook update projects overall economic growth to slow to 3.2% in 2025 and 3.1% in 2026, down from 3.3% in 2024. They see the world adjusting to rising protectionism and fragmentation and are now below pre-policy shift levels. American growth is now expected lower at 2% in 2025 and similar in 2026, while China's economy is expected to slow to 4.8% and 4.2% in 2026. Europe is forecast to expand to 1.2% in 2025, 1.1% in 2026, Japan by 1.1% and 0.6% respectively, and Australia by 1.8% and 2.1% in 2026. Meanwhile, global inflation is expected to continue easing, though trends will vary across countries, above target in the US, with risks tilted to the upside, while staying subdued elsewhere. The US Treasury 10-year yield is now at 4.03%, down 4 basis points from yesterday at this time. And the price of gold will start today at $4,145 an ounce, up $35 from yesterday. But American oil prices are $1 lower, at $58.50 a barrel, while the international Brent price is now down to $62.50 a barrel. That is changed by lower demand and higher supply expectations. And the Kiwi dollar is now just on 57.2 US cents, down 20 basis points from yesterday. But against the Aussie, we were up 20 basis points at 88.1 Australian cents. Against the euro, we're down 30 basis points at 49.3 euro cents. That all means our trade-weighted index starts today at just under 61.8 and down 10 basis points from yesterday. And the Bitcoin price starts today at $112,593 and down 1.8% from yesterday. Volatility over the past 24 hours, though, has been moderate at plus or minus 2.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.